Some new players, like insurance companies, are replacing the role of the banks in financing some real estate in Europe. Do you think 2014 is going to be too soon for these kind of new players to access our market, to access Spain, or is the right time to start doing this kind of business?
To say, when talking of trends in real estate, I think that definitely non-banking finance is a sector for the next couple of years. We're talking to many people who have a very active interest, not only European insurance companies, but also American debt rates. They can do financing, they're used to that. They want to do it. Their major concern is because they've learned and they're afraid from the experience of banks in Spain. They all are very concerned about how long does a mortgage to be enforced, what happens if the company goes bankrupt. This is key. They don't want to go through the same pain that banks are going through. But definitely that's going to be the sector. Because if you think of Sareb itself, out of the some 50 billion euros that they have in their books, 80% is debt, 20% is real estate. So, and they have, again, when we're talking about even these assets in the middle of nowhere, Sareb has 15 years to get rid of them. So they can focus on it, but the biggest transactions that Sareb has done this year have been related to debt. People buying debt. There will be new people bringing debt. And so that's going to be another way to enter into our market. Not just buying assets, but financing them, or with mixed structures of equity debt, servicing, everything. So, and there's this huge amount of capital that is looking at it, and we'll need to see who goes first. But it's going to be, because all big European insurance companies, they're doing it across Europe. But Spain, we still need to provide more comfort as to the speed in the enforcement of warranties. Not only mortgages, but also pledges. But that's a hot spot, I guess.